So we've had a really perfect delivery to the low end of the fair value gap here, and we'll see if it wants to rally up and start spooling higher. This is our bearish order block. We don't even want to see this act as a speed bump, meaning it wouldn't be ideal for it to hit this and be slowed down at all. We would want to see it go through that, and more specifically, not just enter it, but go right through the midpoint of the candle, which is mean threshold. So when I'm watching this area like this, and I'm thinking if it's going to reach for buy side or attack the daily high going into the close on a Friday, if I have an order block like this, I'm watching price and I want to see it needs to quickly go into the candle's body and go right through the midpoint, which is mean threshold. That's the qualification. That's the little nudge that I'm on side. I'm confident that it's going to do what I'm expecting it to do if it runs quickly through the midpoint of the order block. If it does a run up here and just bounces away from it and just meanders around, that's not as ideal. It means that it could consolidate or it could reverse entirely and come back against the idea. So I'll annotate the mean threshold on this candle in the event if we get a run. So what is that? 95.25. So we would want to see it rip into 95.25 aggressively and run right through it. If it's going to rally and go for the buy side, that's how you know to trust it. How do you know, ICT, to trust these moves, yada, yada, yada? And it's because of that. It's tearing into the order block and not respecting the mean threshold, which is this little red level here. All right, to see what it's doing here, this is what I don't want to see. This is what I've just explained to you. We don't want to see it go into the order block and fail to run up into mean threshold and tear through it. What is it doing? It's retracing back down into the fair value gap. That is something that you don't want to see, and it takes much more for it to turn around and go higher from this point. And if you're in a trade and your stop's at 89, as we indicated down here because we have this fair value gap, it can be a little unnerving for you when it digs that back down into that fair value gap. So we want to see this candle here or the very next one, because it's 52 seconds before the turn of the new candle. We want to see the next candle when it opens immediately run higher. Not even mess around, just rip higher. Does it tear through mean threshold? We don't want to see it respect it at all. See, that's not what we want to see. We don't want to see that. So what you're watching is you don't want to see that candle turn on you. It's got to stay above its low. Dig through. Okay, so now we're okay. Now watch the buy side over here. And much like we just described on the order block here, we want to see the same event here for this fair value gap. So while I don't have this on my charts, my eyes going to these points over here, and I'm saying, okay, I know that price is roughly here at 40.97.5. I want to see it rip through 47.97 rather, 40.97, this price here, essentially midpoint or consequent encroachment of the gap that is between this candle's low and this candle's high with this one little. All right, so we would want to see large range expansion. Usually when you see me doing my recorded trades, I'll type out and say I want to see speed and distance, or sharp decline if I'm looking for it to be bearish. I want to see big range up, green big up candles. That's what I'm saying. Like I want to see large range green up close candles. You see how fast we went right to the consequent encroachment? That's that mid-level right here. When I see that, I feel like that's like a confirmation that you would be on side and I'm on side if I'm expecting it. So I would reasonably expect to see it to go through here. Now if it goes through here, we want to see it expand up with a lot of velocity and speed, so that way it can dig into this level over here and take out that high, which in my heart I wish I would just not see it taken out, because 4101.50, even though my last contract didn't get a fill because the spread, the high and the low was called to you in advance today. The fairy tale stuff that they say can't be done. So you can see it's already moved about 5 handles or so. What's the open on that? Or close rather. 9250, and there's your 5 handles, and it's tearing through the fair value gap, coming back, touching it. Watch the low. It can come back and touch that. It's fine. If it comes outside the fair value gap, watch the consequent encroachment of this wick. That's what my eyes go into. When I'm looking at it, I'm watching, does it support it? I need 3 PD arrays. 3 PD arrays. Once I see 3 of them break, then I'm gonna look to collapse the trade or take some of the trade off. In this case, nothing here is problematic.